This ICT silver bullet strategy could have netted you a total profit of 46% if you had traded it from the start of January 2024 through March 12, 2024. That works out to an average monthly profit of around 19%, which is pretty impressive. In this video, we'll break down what this strategy is all about, the indicators you need to make it work, and the specific entry and exit rules. Stick around until the end because we'll also share some key details from our backtesting, like the number of trades taken, the strategy's win rate, the maximum drawdown, and not only that, I will also show you how to turn this strategy into a fully automated bot with alerts, all for free. If you find this video helpful, don't forget to give it a thumbs up. Let's dive in. The main indicator for this strategy is called the ICT Silver Bullet Indicator. To add it to your chart, head over to TradingView, the trading platform I'll be using. If you need to sign up, the link is in the video description. Next, load the 5-minute chart for GBP JPY, though you're not limited to this pair. You can use any trading instrument you like, as long as the time frame is 15 minutes or less. For now, let's stick with the 5-minute GBP JPY chart. After that, click on Indicators and search for the ICT Silver Bullet Indicator. Look the one created by my favorite author, LuxAlgo. Big shout out to them. The Silver Bullet Indicator by LuxAlgo is based on a concept from ICT or Inner Circle Trader. It's designed to identify and capitalize on fair value gaps that form during specific 1-hour intervals, known as Silver Bullet windows. These windows are preset times when the market has the potential for significant price movements. The indicator highlights potential support and resistance levels, as well as fair value gaps, which traders can use to their advantage. Now, let's break down the components of this indicator. The indicator consists of the 3 main elements: silver bullet windows, bullish and bearish fair value gaps, and support and resistance lines. The red lines at the bottom represent support, while the blue lines at top indicate resistance. The area between the 2 gray lines is the silver bullet window. Each day, there are 3 silver bullet windows, as you can see in the indicator settings. The first window runs from 3 to 4 a.m., the second from 10 to 11 a.m., and the third from 2 to 3 p.m. These times are based on New York local time, so 3 to 4 a.m. corresponds to the first hour of the London session. 10 to 11 a.m. falls during the New York session, and 2 to 3 p.m. is also part of New York session. Lastly, you'll see bullish and bearish fair value gaps, which are represented by light blue and light red rectangles, respectively. In the indicator settings, you can disable the labels for the silver bullet times by unchecking the boxes. You'll also want to disable the target high and target low options. Next, head over to the Inputs tab. Here you'll find the swing settings, but we won't be using these since they're only relevant if you activate the trend option, which uses zigzag patterns to identify trends. We'll disable this, making the swing settings irrelevant because we'll use a different indicator to determine the trend. The next option allows you to show or hide the silver bullet session. You can also choose to display all fair value gaps or only those in the direction of the trend. For this video, I'll stick with the super strict setting, which filters out the most fair value gaps and only shows those with a higher probability of success. We'll also disable the support and resistance levels by unchecking the Keep Lines option. Once you've made these changes, click OK. At this point, you might be wondering how to actually use this indicator to trade. I'll explain, but first, let me introduce you to my trading family at Bybit.
Welcome aboard our crypto arc where dreams meet freedom. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy 0 fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success.
Alright, now back to the strategy. How do we actually use this indicator to trade? is actually pretty straightforward. First, identify a silver bullet window marked by a gray vertical line. Next, look for a bullish fair value gap represented by a light blue rectangle. Once the fair value gap is identified, wait for the price to retest the gap. A retest is confirmed when at least one bearish or let's say red candle touches the gap with its wick or closes inside the gap, as long as it doesn't close below the gap. For example, this red candle here did the retest. After the retest, wait for a continuation signal, indicated by a bullish or let's say green candle. If next candle is also red, wait patiently until a green candle appears. This green candle is your entry signal. For a short position, you'd do the opposite. However, if you backtest this strategy using only this indicator, you'll find that it's actually losing the strategy because it produces many false signals during ranging markets. To fix this and turn it into a profitable strategy capable of generating the returns we saw over 2.5 months, we need to add one more indicator to the chart. Open the indicator search tab and look for an indicator called 7 EMA, 5 EMA by Storewise. Big shout out to them as well. Double click on it to adjust the settings. On the Inputs tab, change the EMA1 length to 8, EMA2 to 13, EMA3 to 21, and EMA4 to 34. On the Style tab, change EMA1 color to green, EMA2 to blue, EMA3 to orange, and EMA4 to red. Disable the remaining EMAs so only the first 4 are active. Now, click OK. We'll use these 4 EMAs to identify bullish and bearish trends. For a bullish trend, the EMAs should be aligned with the green one on top, followed by blue, orange, and red. For a bearish trend, the order is reversed, with the red on top, followed by orange, blue, and green. Now let's go over the entry conditions for a long position. First, identify a silver bullet window, or let's say gray vertical line. Second, spot a bullish fair value gap, or let's say light blue rectangle. 3, wait for the price to retest the gap, or let's say a red candle touching the gap. And finally, confirm a bullish trend, or let's say EMAs aligned green, blue, orange, red. Once all conditions are met, enter a long position. Set your stop loss below the fair value gap or below the lowest wick if it extends further. For take profit, aim for 1.5 times your risk. For a short position, follow the same steps but in reverse. Now let's look at the results of backtesting this strategy from January 2nd, 2024 to March 12th, 2024. We assumed a 2% risk per trade and a 3% reward for winning trades, giving us a 1 to 1.5 risk to reward ratio. The win rate was 67.86%. and the account gained 46.2%. If you were trading with a 100K account, this is the profit you could have made. Over 28 trades, there were 19 wins and 9 losses. The profit factor was 3.17 with a maximum of 5 consecutive wins and only 3 consecutive losses. The maximum drawdown was just under 6%, which is excellent. Keep in mind, we only backtested this strategy for about 2.5 months, taking 28 trades. While the results look promising, further research, backtesting, and forward testing are needed to refine the strategy and make it even more profitable. If you have any questions about the strategy or the indicators used, drop them in the comments below. And now, as promised, you can check out the recommended videos on your screen to learn how to turn not only this strategy but any trading strategy into a fully automated bot with alerts, so it does job for you while you're away. That's it for this video. If you found it helpful, hit the like button and consider subscribing if you haven't done it yet for more content. I'll see you next time.